Of course, everything is the Fed's fault. So the Silicon Valley Bank situation, in a basic terms, right, you have a bank that specializes in lending to startups, venture capital firms, right? And so they they do business with these companies. They lend to these companies, and in many situations, they require these companies to have deposits with the bank if they received a loan or something like that, right? And then that particular bank takes the deposits and puts them into mortgage-backed securities, right? Say government bonds, safe places, right? And because interest rates were low, they put them into low interest rate instruments that were long duration, right? And anytime you have a fixed income security bond, when interest rates go up, which they have been going up over the last year, the value of these securities goes down. And especially when it's a long duration, the value changes a lot, right? So that particular bank had huge losses because of that. And as all banks, they're highly levered. And then when you have a situation where the customers don't think that their deposits are safe, they're going to want to take them out, creates a bank run, and that's what created this situation. But now, so as I said in my previous video, all these people have different opinions whose fault it is. Some are saying it's the Fed's fault. Some are saying that the bank didn't have good risk management. I'm not going to get into this. But here's the thing. When you have the Fed that constantly messes up the economy by manipulating interest rates, you will have problems. Because when they stimulate and then they take interest rates to zero, what does this do? Well, this creates cheap money. This cheap money makes projects, businesses that possible that should never started, right? This makes all sorts of institutions invest in low coupon, long duration securities. And then when the Fed comes in and raises interest rates to fight inflation. By the way, the inflation that the government created, right? Because why do we even have this inflation? Well, the definition of inflation is the increase in the monetary supply, like blowing up a balloon, inflate a balloon, right? That's the definition of inflation. But now, the way people understand inflation is increase in prices, right? So really, inflation, the increase in the monetary supply, is not increase in prices. But increase in the monetary supply might contribute to increase in prices. But there's other things that also contribute to increase in prices. And now, why did prices increase? Did they just increase? Who created them? Well, the response to COVID, the constant money printing, that's what creates inflation. The government running deficits, right? So who paid people not to work during COVID, right? So they created inflation, and now they are increasing interest rates at incredible speed to fight something that they created, right? But such a rapid increase in interest rates creates losses on those instruments that were originated during the time when interest rates were low. So somebody is holding those instruments, and this creates huge losses, right? And also, the low interest rates environment that we had for so long. Do you think it's a coincidence that stupid crypto projects, that NFTs were born out of this? No, there was cheap money flying around. People didn't know what to do with the money, and we, as the world, we hired people to work on worthless projects. We had programmers that instead of working on useful things, they were creating useless cryptos. They were creating useless NFTs, right? So the price for programmers were going up because they were busy doing stupid things, right? And then the Fed comes in and starts increasing interest rates to fight the inflation that they and the government created. And the result is now a lot of pain in the bond market, a lot of pain in the growth sector. And not all growth is bad, right? Do you think this is a coincidence that Voxter went almost to $2, and then the moment that the Fed started raising interest rates like lunatics, the Voxter goes from almost $2 to 20 cents? Do you think this is a coincidence? Do you think like all of this is because the company didn't deliver? Right? Do you think it's a coincidence that Oracle goes from 350 to 60 cents during the same time that the Fed is raising interest rates? It's not a coincidence. So you have a situation where there's huge losses in the bond portfolios because of, well, first, the interest rates should have never gone to zero. That's number one. Then, after they create all these problems, then they start lowering them so fast, creating all these losses. And now you have companies that are starved out of capital because everybody is afraid to invest in anything. And those companies are actually doing and performing quite well, but they are getting hit so badly because of the interest rates going up, right? So now, if those companies are not yet profitable, even though they're executing and they're growing their business, now they have to come to market to raise money, diluting the existing shareholders at ridiculous prices because of, first, the stupidity of the Fed to lower interest rates to zero, create all this speculation and stupidity, and now trying to fight the problem that they created. So we'll see. We'll see how this thing plays out. It's going to be an interesting weekend. Let's stay tuned.